Welcome back to the Long Acres Finance channel. Today we will be taking a closer look at a potentially undervalued dividend growth stock that may be poised to offer above average returns in the near future. This stock sports a solid 3.3% current dividend yield and has a strong history of dividend growth. The stock I am talking about is Amgen, ticker symbol AMGN. Amgen has appeared on my monthly high-yield dividend stock watchlist every month for the last 12 months. I have been buying shares of Amgen in my personal portfolios throughout the year, but it has not performed too well thus far. In fact, the stock has a negative year-to-date return. So why do I keep buying shares while the price continues to decline? Well, because I believe Amgen is a quality company, and I like the prospects for the business in the long term. I also think the stock is a bargain at today's price, and has the potential to offer strong returns in the future. This is purely my opinion, and I encourage all of you to do your own due diligence before making any investing decisions. Let's take a closer look at Amgen, and why I think the stock presents an attractive opportunity. First off, from a fundamental perspective, Amgen presents a very sound business model. Revenue for the company has grown fairly consistently during the last decade, expanding from approximately $15.5 to $25.5 billion. Analysts are forecasting this pattern to continue in the future, with projected growth through 2027, and total revenue peaking around $30.5 billion. That is not a fast growth rate by any means, but a 4% annual growth of revenue for a mature company is pretty solid in my book. Beyond 2027, revenue is projected to decline, which is a concern, but there are fewer analysts making forecasts this far out in the future. I think the shorter-term forecasts carry more weight and are more likely to be accurate. Bottom-line figures have followed the same growth trajectory as top-line revenue growth. Analysts are also forecasting earnings per share to increase through 2027 and, similar to revenue, decline thereafter. I think the top-line and bottom-line growth projections should carry over to dividend growth, and we can expect a decent level of dividend increases from Amgen over the next 5 to 6 years. The stock currently offers a healthy dividend yield of about 3.3%. That is actually one of the most attractive dividend yields during the last 10 years. There were only 2 other times in recent history that investors could have picked up shares of the stock with a dividend yield above 3%. The first was in the summer of 2019, and then once more during the 2020 pandemic lows. The reason investors are presented with this premium dividend yield for Amgen today is because of the share price decline this year and the sustained long-term dividend growth. Amgen has increased its dividend for 10 consecutive years now. The most recent dividend increase saw the annual dividend grow 10% year over year, which is in line with the 3 and 5 year trailing dividend growth rates. As dividend growth rates cooled off from the high 20s range in the early 2010s, the payout ratio has plateaued in the 40 to 50% range. This is a very healthy range for the company to sustain, offering excellent dividend coverage and room for future growth. I am forecasting an 8% continued dividend growth rate for the company over the next 4 years. That is in line with analyst estimates. Comparing this rate of dividend growth to forecasted earnings, Amgen would maintain a payout ratio in the low 40% range. In terms of total return, Amgen is trailing the S&P by over 40% during the past year. This is a pretty terrible position for those that invested in the stock a year ago. If we move out further back in time, we can see that the stock aligned quite nicely with the S&P total return up until late 2020, when the market left Amgen in the dust. During the past 10 years, Amgen has rewarded long-term investors with above-average returns in comparison to the S&P, even with the recent pullback. I think fundamentally the company is sound, and there is a market sentiment disconnect between the share price and fair valuation. Amgen has a 5-year trailing dividend yield of 2.66%. When compared to today's premium 3.3% dividend yield, we are presented with a potential 25% undervaluation. Based on dividend yield theory, the fair price for the stock is somewhere in the $265 range, with the current price being closer to $211. If we take the expected earnings per share growth rate of 6.94% and combine it with the 3.33% current dividend yield, we are presented with a low double-digit expected rate of return. If we factor in a potential return to fair value over the next 5 years, that would give us an additional 5.64% of total return per year. These 3 factors combined point to a potential 15.91% annual return for Amgen over the next 5 years. That's a pretty solid rate of return that leaves a little margin room for my expectations. Of course, other factors can play a role on future returns, and there is always a risk that Amgen will not hit its growth forecasts. Additionally, the share price has continued to decline since early July and may continue to drop further. I personally think the share price decline is near its end, as the price is flirting with its 200-day moving average. Historically, this has acted as a good support level for the stock. As you can see here, during the last few years, Amgen's share price has crossed below its 200-day moving average on 2 occasions, followed by periods of continued growth. In early October, the share price dipped below the moving average line, but has since bounced back. I think the stock could consolidate at this level and make an upward move in the near future. But even if it doesn't, I have a long-term investing perspective, and I will wait patiently for this position to pan out. Amgen currently has about 20 drugs in the market with a few additional medications in the pipeline. The largest contributor to revenue is Amgen's flagship, Enbrel, that accounts for about 20% of total revenue. Sales of Enbrel are declining, and will continue to do so, as competitors enter the space and Amgen's patent protection winds down during the next 8 years. The decline in Enbrel and a few other drugs is offset by fast growth of more recent offerings by the company. In Q3 of 2021, Amgen saw record sales for 8 of their products, and significant growth in international sales. The US market still accounts for over 70% of total revenue, and will be important for future sustained growth. There's a disconnect between drug prices in the United States and globally. This could potentially be a wrench in the gears for Amgen, should the US government seek to pursue the disproportionately high cost of drug prices. It's definitely something investors should pay attention to, as the negative market sentiment alone could cause further share price decline. I already have a sizable position in the stock. Amgen is currently the 34th largest holding in my portfolio. I own a little more than 8 shares of the stock, with an estimated market value of about $1,700. This position is roughly 1.46% of my total account value, and it's projected to generate $57.57 of annual dividend income. That is 2.91% of my total forecasted annual dividend income. I've been adding capital to Amgen across all 3 of my investment accounts, and I will probably continue to do so in the near future. I hope you enjoyed this content. If you did, I would appreciate if you gave this video a like. Thank you for watching, don't forget to subscribe, and see you next time.